All right, ladies and gentlemen, traders, welcome back to another Relentless recap. I wasn't gonna do one tonight, but hey, you know what? I'm home. Why not? Let's do it. Guys, today we are up 1,500 bucks. This is our smallest green day of the week. Um, you know, Sometimes it happens, right? I kind of botched the day, and on top of that, I did leave out a little early, missing stock HOLO, and the awesome move that it gave. But hey, you know what? It's a great week. We're heading into the weekend green. It's been amazing. Right now we're smiling, we're feeling good, and we're looking forward to studying up over this extended weekend and coming back stronger on Tuesday morning. So for those of you who are in the States and those of you out of the States, right, remember Monday is a federal holiday here, President's Day. The stock market will be closed. Just keep that in mind. So, of course, there's a couple of things that we want to address in this recap. First and foremost, we'll talk about how we found the stocks we traded today utilizing the Momo Pro scanners. We'll talk about some of the patterns and edges that I was looking to trade. And then lastly, we'll talk about how I usually manage risk here on a day to day. Now, before we get into that, there's a few points that I want to make. Guys, remember that the way how this YouTube channel is designed, for those of you who are the casual viewer, the newer viewers, this YouTube channel is really designed for people who are already on an intermediate level, right? What does that mean? So, a lot of people watching on already have some sort of knowledge about trading. They already understand a lot of the basics of the candlesticks and the charts, and even to some degree the patterns and edges that we trade. Now, for those of you who have no idea what anything here looks like, if you don't understand what's on the screen, if you don't understand what day trading is and scalping is, guys, I do have a day trading course that is designed from zero, from nothing, knowing nothing, no knowledge, to very advanced, to everything I know, right? So, the expectation here, right? And even for those people who are coming in, who are taking the classes, right? The expectation is that you go through the material and you build your knowledge, and then, you kind of get incorporated into what's already happening here now, right? And so for those students who are our gold members, of course, they can reach out to us on a one-to-one basis and get more help if they need. If they have something in the chapters they don't understand, they can reach out to us to help to get them up to speed. So understand that these recaps are being done under the basis that the people watching have a certain level of knowledge already. If you don't know anything, a lot of what I'm saying might sound like gibberish. It might not make any sense. All right. So before we really officially jump into it, just remember our disclaimer. It's very important that I mention this. I know some of you guys are like, oh, here we go again. The disclaimer, we know it, we get it. But there are new people finding out about the channel every day. There are people who are casually viewing who needs to understand that day trading is risky business, right? Day trading is a business. You should treat it as such and understand that a lot of people are having a hard time. In fact, 80% of small businesses fail within the first 3 years. Day trading is no different. In fact, they say 9 out of 10 day traders fail, right? So you got to understand that it's the kind of field that you want to approach in a safe and low risk way. And you can do that by utilizing either a paper trading simulator. That's where you can practice trading the real stock market essentially in a fake account, right? You can get a fake account and practice trading the live market to build experience and gain knowledge. This is something I did in the very beginning of my career to help hone my skills, to help become better, to become competent before I used real money, right? So the other, of course, side of things is to use real money, but a very small amount of it, right? If you're new, do you really need a big account of 100 grand? No. Guys, you can start small in a cash account and just practice with a couple of shares, 2 shares, 3 shares until you get the hang of things. And of course, pretty soon we'll be getting instant or let's say 1 day settlement for cash accounts. Other than that, remember the live streams, the recaps that I do here every day are never a reason to try and copy trade what I'm doing. Copy trading doesn't work. it's a matter of understanding the system, the strategy, to then be able to fish for yourself, right? You got to learn how to survive, not just try to follow blindly and think that can work. That's ludicrous. This is a very fast-paced strategy. The YouTube stream has a latency and delay to it. That stuff wouldn't work. We have to spend time on this disclaimer. This is an important part of what we're doing here. We can't just breeze through this quickly and skip. No. Guys, remember lastly, I do not invest money for my subscribers. And on top of that, be very careful of fake accounts, impersonating accounts, people pretending to be me. I will never message you first randomly for no reason. I'm too busy trading, working with my students, and doing other things in my personal life than to just be messaging people randomly all day. That there's no way. If that's happening right now, it's a fake account. There has to be some real legit reason. Maybe you broke a rule in the Discord, a severe rule, and I'm gonna keep you in check, or you reached out to me first with a question, that kind of thing. So be careful. I will never ask for personal information, money. I'll never ask you to click on a weird link. I'll never ask you for sign up for anything, random or weird, right? The only things that I talk about here every day is the Momo Pro scanners, my day trading course, Merciless Markets, and these links are down below. These links are not like, hidden away or anything. Like, these links are down below in the description, right? And of course, other than that, the Relentless day trading chat room itself, right? So these are the only things, three things here really that we are promoting and talking about, right? So yeah, just keep in mind, like, and right here, here's a good example of a fake account that we caught pretending to be Mighty Stocks Marcelo, one of the other mentors in the community. This is unfortunately happening every day and all day long. These people are people who have nothing to do and all day to do it. And so they try to exploit other good, honest working people. So now that we are done with the disclaimer, right? And I forgot I was on the screen, but anyhow, you guys got what I'm saying here with the three things that we promote and talk about. Hit that thumbs up and let's officially begin the recap. So we started off this morning by checking out our Momo Pro scanner. Momo Pro is the scanning software that I use, and the Pro Plus option comes along with this section called the Discovery section, which is essentially a gap scanner, right? Now, early in the morning when I come, there is nothing that is required in terms of filter other than me hitting last percentage and making sure it's filtering stocks in percentage order going down. Now, early in the morning, this filter is very tight because, a lot of time did not progress throughout the day. Right about now, we've had so many stocks move that all sorts of cheap stocks and nonsense is now on here. But I do have a personalized filter, which any of you guys can reach out to me for in the Discord if you're using this platform. Relentless Momo, which I do not use up until a time like now. Again, in the morning, I use the no filter. But Relentless Momo right now will tighten it up for us, get rid of anything below $1, and only filter for exactly what I want to see here when it comes to percentage gain, volume, float, right? So usually when I'm coming in the morning, stocks are usually already up a high percentage. CPOP I think was already up like 200%. So I'm waking up and I'm coming to just try and ride the little bit of wave left into the open. If I can get something, that's great. So HTOO, and you guys will see a few other stocks here. So my watch list, if I come back to the Discord, my watch list was compiled very early on here. So let's go ahead and do that. And by the way, let me show you guys this fake account. So what these people will try and do is to create an account with a very similar name, and they'll steal our user, not our username, what is it called, the profile picture, to try and pretend that they're us. So again, be very careful. Right, so coming down to the alert section, I'm watching CPOP, HTOO, and two other stocks right here. So if we come back over to see the stocks we traded, you guys will see some of those same stocks are listed right here, right? CPOP, HTOO. So now let's get into the patterns that I was looking to trade, right? So let's start off with CPOP. Relentless, what patterns were you looking to trade and how were you looking to manage risk on those set patterns, right? Let's make sure all of our charting is in frame. Let's make sure everything is looking good. So to start the day, just for some context, we were selling off. We were coming down. We were coming down. And usually when a pattern is looking like this, where we have highs all the way up here around $8, 8.50, and we're selling off, dropping, 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 we want to see what is called the red to green. So the next question might be, hey, Relentless, where are you getting these patterns from? Well, besides my brain, I have them listed here in the chapters. Now, you don't have to be a course member or a student to see these patterns in terms of just in the raw form right here in the chapters, right? So, of course, the link is down below, Merciless Markets. You don't have to buy nothing. Don't worry about none of that. Just come on down here to chapter 24 and you'll be able to visually see every pattern and edge that I trade, right? So if you look down through, closely, you'll see the red to green, right? Okay, right here at number 8, the red to green. So the red to green is essentially what I just described. Can we go from red to green? And now there's a couple of indicators that can lead to me then buying, because the stock could be giving a red to green but not be viable for me to trade, right? Now, what are those indicators? So I'm looking, as we're coming into the open, I'm looking at volume and I'm looking at how fast and how aggressive we are moving up. And from that point on, I start to look at the level 2 and the tape, right? So the level 2 and the tape is also another indicator that can help me to determine a trigger point, a buying point. So, and I know for the casual viewer, this might sound a little hard to understand, or it might be, it might sound a little complicated, but if you're new to mechanic work and it's your first time owning a car, first time looking under the engine or under the hood rather, and you look at that engine, it's gonna seem intimidating. It's gonna seem like a lot. People are gonna be using terms like, hey, to change that sensor, the oil, the coolant, the antifreeze, the water pump, the this, that, this gasket. And you're gonna be like, what the heck? The brake fluid's like, what the heck is that? But start doing your research and quickly realize how simple these things actually are. At that point, it's a matter of repetition and power tools to get to where you need to get to be able to accomplish this goal, right? Now, that doesn't make it easy, but at least you gain some sort of knowledge of what to do and where to look, right? Because it's still going to be hard back-breaking work, screwing out and, blow torches, rusty screws. But anyhow, so I'm watching right here for the red to green, and this is on a very short-term basis, right? So there's micro and macro. So there's small time frame, there's big time frame, and on the 1 minute time frame, you know, I want to start to see volume, and I also want to see us continuing. So right here we had a low of 394 all the way to 440. The stock has jumped up 40 cents in less than 1 minute. So again, if you're gaining experience, you're gaining knowledge, that alone will already allow you to know that that is something pretty significant, right? Guys, in a cold market, a stock might take 1 hour to go up 40 cents. And some of this stuff again does come with, um, learning and building experience, right? That's how we'll instantly be able to recognize this is something of importance. Now, from there, we made a new high from 440 all the way to then 530. 530. And this recap is going to be in layman's term. I think that's the word and how it's pronounced. But anyhow, it's going to be very beginner friendly, right? But let's talk about the cash aspect. So from 440 to 530, right? Let's talk about the cash aspect. So if I buy 1,000 shares, right? 1K shares, right? 1,000 shares, of course, would be, you know, uh, three. What was the high of this candle? 440 times 1,000, right? So what is that? 4,400 if my math is any good, right? You'd be using $4,000 worth of your own money to be able to afford 1,000 shares at the very highest point of this green candle right here, right? So now that's just the amount of cash. And let's write that down, right? 4,000, right? To buy right here, 1,000 shares worth would be 4,000 bucks. I just put 4K, right? Now, before we even talk about the stock going up, let's talk about the risk. Is it possible for you to lose your entire $4,000 worth of cash that you have in your account in this one trade? Is that possible? Well, in order for you to lose your entire $4,000, the stock has to go from 440 to zero. Now, what is the likelihood that you hold this thing from 440 all the way to $0 without selling? Not likely, and also not very likely for the strategy that we trade, which is a very fast-paced breakout or bailout strategy and hyper scalping strategy that, we trade hundreds of times within one day. We buy and sell hundreds of times within one day, and we're primarily managing risk when a stock is going down by cutting it as quickly as we possibly can. So if I'm contemplating the red to green, which again is the main pattern that's going on here, and we can use a different color here. If I'm contemplating the red to green, which is the main pattern that I'm looking for. So we're coming down, we're going to use blue, and I want to see us go green, right? If this is what I'm looking for, and I'm noticing that the 1 minute candle is making a new high, and in the chapters we talk about how well this can be utilized towards being an entry point and an area to be in to see follow through. That along with the level 2 time and sales, not having any sort of selling indicator like resistance, trend lines, moving averages right above us, right? Guys, it's in, and if it's not going, I'm out. It's in, and if it's not going, I'm out. Because guess what? If I'm not in at 440, I can be back in at 450 or 55 or 60, especially when we're in a hot market and there's an expectation that we can potentially see a huge move like this, right? So when it comes to the risk, okay, let's say the stock does fail miserably in the worst case possible, and it goes from 40 all the way down to the low of $4, right? And you lose 40 cents. Well, 40 cents on 1,000 shares, you would lose $400. If this fails miserably, you'd be at minus $400 in this one trade, right? Now, when it comes to managing risk, if your account is at 4,000 and you're not comfortable or you're not consistently making money and you don't want to lose this amount of money, you don't have to use 1,000 shares. You can just use 10 shares, in which case, if it drops like that, you'll only lose $4, right? So you can essentially determine the amount you're willing to lose based off of the pattern, the setup, and also, managing share size. Okay, man, 400, my account's at 4,000. I'm not looking to lose 400 in one trade. Maybe I'm more comfortable losing $40 in one trade, in which case I'll use 100 share size, instead of 4,000 share size, right? In which case maybe you're in there now with just $1,000 worth of cash rather than $4,000 worth of cash. Now let's talk about the reward. If this stock goes up like it did, and we go all the way to a high of 530, how much money can you potentially make with this 1,000 shares? Now from 440 to 530 is about 90 cents. Is that 90 cents or 80 cents? Yeah, 90 cents. And you know, you're probably not going to capture the entire 90 cents. Let's say you capture 50 cents, right? Going up, you can potentially make $500 which is of course, half the amount of shares you're going up. So, 1K shares by 50 is 500. Well, 50 cents rather is 500, right? And that's you doing super well on the way up. So that's to the extreme. To the extreme on the downside, you can lose 400. To the extreme on the upside, you can make 500. Now, what helps you to keep your losses small? Again, mitigating and managing share size. And the other part of it is cutting the loss quickly if you realize the stock isn't immediately going in your direction, right? And just for reference, if we come down to some of the trades that I took today, just pay attention to the time frame of the which as to which I'm in these trades. So from 9:30 in 5 seconds, I'm out within 3 seconds. I'm out within 3 seconds. I'm out within 4 seconds, 5 seconds, 3 seconds, 2 seconds. I'm literally in and out within seconds. The moment it's not going, I'm back out. The moment that I realize it's holding up and doing well, I'm in and I'm looking to ride the wave up. Nobody can't tell me that this doesn't work because I do it on a daily basis. I do this every day. And today for $1,500 in gains. So this is the amount of risk to the extreme. This is the amount of profits to the extreme. And that is just within this one. This is just within this one stock within the first 2 minutes of the day. Or the open, let's say the open, because the day really already started before, right? So let's clear this up. Let's clear this up. I know sometimes this stuff can be hard. And, I'm kind of like catering to some of the casual viewers today, but I know some of this stuff can be a little harder to follow. But just know that with the strategy that I'm trading, to the extreme, I could have made 500 or lost 400, but I could have managed risk to maybe, if I'm worried about how much I could lose, I can reduce that amount of risk by using smaller size and not have to risk as much. Maybe a little too tongue twisting there, but yeah. Now, cutting the loss tightly allows you to be out most of the times because most days we're not getting a huge flush every single trade. In fact, I've never seen a huge flush every single trade. So most times we can be out quickly for a tight stop. Let's say instead of losing 400, we lose, $20, $30, $50, $100. While that upside a lot of the times in a hot market especially is there, right? So if you could make that amount in just this area, what do you think you can potentially do when you zoom out? Or maybe you zoom out some more down here and you include this entirety of the stock, which went from 160 to 850, right? In pre-market, let's come back over here. This thing went from 160 to 850, and that's pre-market, right? So I don't trade pre-market, so I wouldn't even count that, right? But even in this area here, okay, we pulled back, and then we went from a low of 350 to what? A high of 749. So within this area here, right, especially when it breaks over this level right here and starts to rip higher, we get a bull flag, which is another pattern that we look for right here. So this is a bear flag breakdown, right? Because we had the red to green going, bit of a rejection candle. It curls up again, so we still kind of get the red to green going on over here. And then from there, unfortunately, we do sell off a little aggressively right here, right? We do sell off right here. And this is where, and I did get caught in this move down. I got caught right here buying the dip and right here buying the dip. And I'll show you guys those losses. But if I didn't cut my loss quickly, I could have been holding all the way to the lows. So cutting the loss quickly is pretty big. So we get a bear flag. Again, I'm drawing all these patterns. Besides it being in my brain, it's listed here in the chapters, right? So coming back now to the bear flag, the bull flag and bear flag is essentially the inverse, right? A bull flag is us going up, and then there's sideways consolidation. So imagine this being a big green candle and then the stock going sideways. The bear flag is us going down and then sideways consolidation. It can be a little rectangular, it can be a little more of like a triangle like this, right? And so if we draw the pattern right here, this is the pattern, right? This is a bear flag right here. So in this situation, we're watching at the high of the flag, which is this area, to see if the stock does get over. And if it does, that could be pretty good and we can surge up. And this is why I'm a little disappointed, because this was pretty clean right here. And the dip down came right back into the resistance, which was great. And from there, the 1 minute candle made the new high and we took off. I should have been up like 5,000 to 6,000 here. I'm only up 200. Very disappointing. So let me pull up the live video from today, because we usually screen record our trades to show our students exactly where we're buying and where we're selling. And so let's just skip ahead. So let's talk about the losses first that I took on the way down right here. So initially, it's a little tricky because of this move up, the move down. I am watching at some other stocks as well. You guys will see that I'm also watching at HTOO, and I'm already green very well on this one. This one I'm also looking for like an opening surge, but CPOP I'm watching because I'm a little late. I'm a little late to the first few candles, but okay, I'm watching, right? We already spoke about what I would have been looking at if I'm here, right? So let's just come ahead a little bit, right? So as this was pushing up, so I'm losing money on the way up initially because as it's going, let's come back a bit, right? As it's going, notice there's a spread, 59 by 69. So initially it's a little thinner. We could have had a little bit more liquidity. We could have had a little bit tighter spreads. And so, I'm trying here for the higher push. So you guys will see 75 now by 70. So I'm watching here. I'm like, man, can we keep pushing? Right here, I'm going to try to buy for 80. I'm a little slow to it. And I end up buying at 85. And there's someone looking to sell 9,000 shares at 85. So I'm in kind of slow. Some of that order is going to get filled. But ultimately, I start to think right here, okay, maybe I'm in a little too high and this thing might need to dip. So if it's not going immediately, I want to be back out. And I am back out right here. So initially, it was a little choppy. So let's skip ahead to that bigger loss. So we had a sequence of those trades there. And then watch right here, I'm going to get caught. So we had a high of 560. And again, guys, this is just to show you that I don't always know what's going to happen. I don't have a time machine to see the trade. It's like I take losses too. Some of you guys, you take losses and then you don't know how to react. You're going on like like you have to understand that you will lose. Look at me losing right here. Look at me lose right here, right now. So this dips. Let's go back a little bit. We're at we had a high 560. It's now at 540. So I'm waiting patiently here. I'm watching at the level 2. It's coming down. We're seeing a lot of red. The red starts to ease a little bit. We're seeing some green. I'm like, you know what? This looks good. Can we hold up $5 here? I'm not necessarily watching for the whole dollar to hold, but I'm more so watching the level 2 where we're stalling out, stuff like that. The price action. But okay, look at that. It's breaking below 5. I want to be back out. So it comes down again, 76. It comes down to 76, and look at my fill right here. I'm gonna get brutalized on this trade here. So I'm in. All right, so let's pay attention to what's happening here. We have 80 by 98. We have 76 by about 95 briefly before we drop to 89. And this is one of those moments where I got a little too fixated on the bid, which is this price right here, and didn't realize where the ask price was. And so there happened to be a huge spread. You guys know the majority of market orders will get filled very high. What I needed to do right here was to buy the bid, which would be me putting out an order right here at 75.80, saying, hey, I want to get filled here, rather than buying market, which would fill me on the ask primarily. Right now, Thinkorswim does have some price improvements, but most of the time you're still going to get a bad fill. So I'm in right here. I'm thinking I'm in at 80, but it's going to drop again. I don't even realize I'm in at 96. I'm going to say, it's not holding. Time to sell. Where's that sell order? There it is. So I'm even a little slow. We can rewatch the entire thing here and let it play. So I could have even been out faster. And it's not holding out. So just like that, and this is how quickly you can lose money, right? Just like that, I basically lose $500. Now, for where I am with my experience and my career, me losing this amount of money in this amount of time is nothing. But for those people who are smaller traders, they're now starting out, you're going through the learning curve. This in itself could be a devastating day. So you cannot compare yourself to me or anyone else for that matter in that fashion, right? What you do with people who are doing well is you use them as motivation, inspiration, and encouragement, and not just, oh, this person did well, I didn't. Oh man, I'm a terrible trader. That's just throwing yourself to the depths of despair. Like you got to understand how to utilize people in that sense. Like, if someone is making $1 million trading the same stock, then it'll give me encouragement that I can improve. Even if I don't get to 1 million, maybe I can go from 200 to 2,000, maybe to 20,000, right? That's kind of how you want to use, other people in a sense. So that's how I lost, right? So now this is going to bring us, so the red to green here at this point is failing. The two dips that I bought where these white lines are right here is where I kind of tried to buy the dip. It's failing. And I had this third white line to tell the audience if I wasn't quick to sell and I decided to, hey, I'm just going to hold and hope and pray, I would have been maybe selling all the way here, wishing the stock would bounce back up, which is not the strategy. The strategy is be in or out, whether the stock is going up or down, but I'm looking for a breakout or looking for a dip. There's only one circumstance where I could hold a little longer, but we didn't even trade that pattern today. That's the 5 minute setup that you guys could look at in the classes, right? So let's skip ahead right here. And so in this area, I'm looking for a dip and rip. Now you might say, Relentless, what do you mean? Why in the world are you looking for a dip? Well, the dip that I thought should have came early did not come, and we just sold off drastically. And this is an irrational drop. And when you drop a ball from a very high place, you should get a bit of a bounce. And this went way too low without bouncing. So I figured we should see a bounce at this point. Now, even with that being said, what I think should happen and what does happen is not always in alignment. So even though I think it should bounce here, it still doesn't mean that it must bounce and it will bounce. If it doesn't, I will continue to keep my stop the same. I will continue to sell the trade quickly. If it's not bouncing where I think it should go, I'm out. Because guess what? The stock can continue to be irrationally weak and sell off. And my account will not be able to withstand me continuously buying it as it goes lower. That is not in my best interest. I will lose because sometimes there can be breaking news that we're not aware of, let's say a secondary offering or just bad news for the stock. And when you think it should be a normal quick move back up, this could drop from 5 all the way down to 3 or 2 or 1 with no bounce. I've seen that before. And if you do not sell, well, say hello and goodbye to your account. That is the risk. So, okay, I'm thinking about a bounce should happen here again. So I'm going to try again, and I'm perfectly comfortable with losing again if it doesn't bounce. So I've already accepted the risk. So we're halted down. This is our halt pattern, right, at 389. And I'm going to buy it aggressively because, again, I think it should bounce. So there's 60 and 55. We get a little bit of selling right into the open. And the moment I start to see 76 and us moving up away from 55, I'm going to say, hey, you know what? I think I'm going to try here. So I'm going to jump in. That right there was literally my only indicator. And so I will classify this particular trade as a very high risk trade. Why do I feel confident to still jump in? Well, okay, I have my thesis of what I think should happen, but more importantly, I feel comfortable knowing that I can sell immediately, even if it is for another good sized loss, and be back out if it doesn't bounce up. But I'm going to give it the chance right here because I thought the drop was irrational. So, really and truly, the confidence is coming from me knowing I can hit the sell button quickly, even if it means for another loss of 300 and I go down 900 in the stock. Do I want to do that? No. But I understand the level of risk that I can take on and manage to the extreme. Let's say something catastrophic happens right here and it drops all the way down to $3 and I lose 1K. If I lose 1K in this trade, it still means nothing to me. So even with the share size I'm using, even to the extremes of something terrible, it still cannot hurt me. So there's still no surprise, right? Just think about that. It's almost like if I'm bulletproof taking this trade here in a sense. Like there's no surprise that can catch me off guard here because I understand the rules of engagement. In fact, this stock we talked about earlier, for me to lose everything, the stock would have to go to zero, right? Now, when I say everything, everything that is tied up into this trade, because 15, let's do the math right here. What's 1500? What's 1500 times 369, right? 1500 at 3.69 is five. I'm in right now. I'm buying $5,500 worth of this company, right? I'm buying $5,500 worth of this company. I am not buying my entire account worth of this company. So I'm already managing risk by not using my entire account, but only using an amount that I'm comfortable with losing, right? Not, and even then, it's impossible for me to lose this entire $5,000 unless this goes to zero in an instant, which is impossible because of how the market works. And again, this is me understanding my rules of engagement. If this stock if this stock drops too fast, too quickly, it'll hit another circuit breaker halt and it'll be halted down at $3. Can it resume lower and go lower? Yes. But I can potentially have a good chance of getting out, before it goes to zero because there's liquidity. It's why we're trading stocks that have volume. This stock is being watched by so many people, and even just on this level two right here, look at how many people are willing to buy from 66, 61, 60, 56 all the way down. There's liquidity. And these are not all the orders. There are hidden orders and different type of other order types that are going through to make it so that my risk is going to be limited to a degree. I can only lose money if I make it personal and I start to hold my losers longer and buy as the stock is going down, which is not the strategy, and two, not in my best interest. So there's no way I'd be doing that. Just doesn't make sense for me and where I'm trying to go with my trading career and my life. Buying lower and averaging down just does not make sense at all. It's just that blunt. Why would I risk losing more than I'm willing to already lose in this trade? So, the people who are averaging down, you got to really ask yourself if you're accepting of the risk. Did you accept that you could lose $1 a share here despite maybe looking to only risk a couple cents or a break even trade? Did you accept the risk that this could halt down instantly and you could lose 1,500 instantly? You know what I would do if that happens to me? Sell the next chance I get to sell, I'll be out. I wouldn't even be bothered because this is the stock market and that type of stuff could happen regardless. Now, you can even, when it comes to even big accounts, let's say your account is $500,000. How do you manage risk then? If you're someone who also loves to take huge share size, well, you can withdraw money out of your account. Maybe you bring your account down to just 100K. God forbid there's a day you use your entire account and there's something catastrophic that happens. Even then, even if you lose that 100K, you still have 400K elsewhere. But even for you to lose that 100K, if you're managing risk well, if you're mitigating risk by utilizing a proper judgment for share size And these things come with education, and of course, over time experience, right? The education as in the classes, right? Seeing myself do it, and talking about how I use different share size for different stocks. There can be a stock at 440 that I'm using 1,500 shares on, and there can be another stock at 440 that I'll use 10,000 shares on, depending on the situation, the price action. Not because, hey, they're the same price, I'm using the same size and putting out the same risk. No. These things you have to understand, right? So, be careful and be very disciplined when it comes to cutting losses. So, anyhows, I'm in, and my thought process here finally pays off. Where I thought we should have had the dip earlier, we didn't, but now we're getting it. I'm in at 69. I'm out at 85 area. And right here, I'm watching at it, and it's like, man, it doesn't look like it wants to drop. So I'm going to get back in again. And can we get through $4 this time? Look at how fast I'm back out. The moment I'm in and it's not continuously going, I'm out. Because I can get back in again. So I'm waiting. Can we go? I saw 4, so I'm going to try again. Can we go? No, it's not going. You see how fast I'm already back out. I'm not wasting no time. Can we go? Once I'm in, it must go. I'm going to try again. Can we go? Can we go? Can we go? Can we go? I'm waiting. I'm waiting. There's 97. Can we go this time? Okay, we will. There's 07. Here's 07. And I'm taking it right between 02 and 07. And I'm going to repeat again. Can we go? Can we keep going? There's 20. This is basically the strategy. Is it easy? Of course not. But the biggest part of the strategy is you mentally not giving in to any frustration, temptation, or anything else in that realm, right? And then right here we get the big move up. So I'm gonna do very well here very quickly. As this gets above 450, which was the resistance, right here I'm gonna size into it, big size. The moment it goes over 450, I'm gonna say, okay, this is my chance. So we get above 50. Can we hold above that area and keep going? I'm gonna buy aggressively here. And can we see the push? So I'm in 64, and I'm watching here for a test of $5. There's 90. Look at how fast the stock goes. This is why we consider this a hot market, because in a cold market, it would have took the same stock 30 minutes to give that move right there of 40 cents. That's the difference between a hot market and a cold market. We'll have more opportunities and quicker opportunities in a hotter cycle. So can we get through 5? Right here, I'm going to try for through 5. There's 520, but unfortunately, the hot level doesn't really move up. So I don't really get a good fill. And I expected, or not the hot level moving up, but the bid price didn't move up. I expected the bid price to move up instantly. So I'm already selling thinking that I will get a good fill. And this is why I'm telling you guys I'm a little disappointed, because I finished only up $200, which means I lost a lot of money. But if it shows you how difficult it is, right? Because you could easily lose money as well. And I'm going to show you guys the trade where I lost the money here. So this is good. I mean, even down to this trade here is going to be like a near flawless trade. I'm going to buy the bid here too, I think. I'm going to put out an order at 53 to buy. And I'm hoping we can hold up the 50 area, 45 area, and get a bounce back up. I'm in, I get the fill, and look at how instantly this jumps up between 75 and 83. I mean, just a beautiful move here going up. I'm going to say, you know what, I'm going to hold it a little longer because I like my entry. And this right here, I'm a little too aggressive on the second sell rather. I could have held it a little longer, but I'm going to hold the 500 shares here. Oh, okay, no, I didn't. Okay, I sold it right there. I think I'm going to get back in. I'm going to get back in. I think that's what I did. I'm going to get back in here around 60 area. Oh no, I'm a little late, and I'm in high. So it's going to end up being a losing trade here. My memory's a little off. This was like since earlier this morning. But anyhow, it jumps up to 510. Okay, here's the losing trade. It gets up to 510. This is the big loss that I'm gonna get. That's gonna put me back to flat. It jumps up to 510. You can see that I'm already kind of off here, right? So if I'm in at 55 and I'm out at 75 area, I really and truly want to be back in at 75.80, selling right here. And if this holds up again, can I be back in again? But unfortunately, you know, I'm in big size because I thought it was going to go all the way up to 67 here for the 1 minute candle to make the new high. And here I am losing again, right? And so I want to show this losing. So I'm in at 10 and I'm out at 77. And from up 1600 to just up 200. And for those of you who get frustrated when you lose, I just want to show you guys how much I lose. But what is getting frustrated going to do for you? Nothing. In fact, it's going to make you a worse trader. So you better figure out how you're not going to get frustrated, or else you're not going to stand a chance. The competition is stiff. There's other trading communities. There's other trading communities. There's algorithms, right? There's hedge funds. There's big banks. We have to be disciplined. We have to figure out a way to be disciplined. And so I always teach the traders, right? In order to be able to, in my opinion, not be frustrated, you must first accept the risk. In fact, if this even had dropped all the way down to 4 and I lost 5 grand instantly, I would have been okay with that because I've already accepted the risk. With great risk, there's great reward. With great reward, there's great risk. They go hand in hand. If I don't want to lose this amount of money in one trade, if I'm wrong, I don't have to go in with that much size. So use a share size that you're comfortable with. Accept the risk so that you're never surprised. That way you don't even get frustrated. What happens to me more so is I'm a little disappointed. So I'm going, oh man, that could have been a sweet trade. Rather than, oh man, I need that back. I'm gonna average down. I'm gonna revenge trade. You should never be frustrated. You must master yourself here in order to stand a chance. If not, to be blunt, you'll be at the mercy of the seas, the mercy of the market. So, you know, ask yourself if you're accepting the risk. Ask yourself if you're using an appropriate share size when it comes to losing and struggling when it comes to managing risk and holding losers longer. If you are doing a great job on those two things and you're still buying lower, then there may be something else that I can't think about right now or that I'm not seeing that could maybe trigger an individual to, into this bad habit. But ultimately, I believe if you are truly accepting the risk, if you're truly using a share size that you're comfortable with and comfortable with losing to the extremes, not just, hey, I'm risking 5 cents and I lost 5 cents. No, to the extreme. Because we never know when a big drop like this could happen. And in fact, hold up. There's an example from today. Here's an example from today, if I can find it. GXAI. Look at GXAI on the left-hand side of the screen, right? This is a good example. All right, look at this. You never know when a stock could drop instantly without giving you a chance to react and or sell. So you must expect the risk to the extreme. You must be comfortable with your share size to the extreme. Right? So look at this. It resumes. I'm watching 58 area to buy. I'm going to buy right here. And the moment it gets up to 60, the moment it gets right here to 60, I'm going to start looking to sell. Let's see if I can pause this in the right area, right? So my brain hasn't even really started to register 55 because I'm looking at the ask. So I'm gonna look to sell right here. We get some red on the tape, right? My order is gonna come through. I'm thinking I'm selling at 55, 60 area, but in fact I'm selling at 41 because the stock instantly drops down. If if I get frustrated because of this, it means I'm too attached to the money. It means I'm too attached to all the wrong things. Because the process states here in this community in MMU that if we accept the risk, if we're using a share size that we're comfortable with to the extreme, and just other than that, understanding the rules of the market, understanding that a stock could look great, a stock could have the best news, the stock could have the best CEO, the stock could have almost everything going for it, the perfect area, and still fail miserably, right? That's the market. So when this happens to you, are you going to be frustrated that you just lost, 500 bucks? Or are you going to say, okay, cool, moving on to the next stock? I'm a little disappointed, but that's all right. If I get tilted here, if I get frustrated here, what time is it? It's 9:41 a.m. at this time. If I get frustrated, not only is the rest of my day ruined, but I'm also at high risk of just trading terribly and blowing up. That guys, this is one of the comments today was like, this is the easiest, hardest way to make money, right? And it's somewhat true. Like we're not out there in the sewer systems, right? For those of you who might have seen Dirty Jobs, right, that TV show, we're not out there in the sewer systems, the landmines, the farms, we're not building a tunnel, we're not building a bridge, we're not laying concrete and sheetrocks and doing roofing. There's some work out there that you can say is a little difficult, right? Even mechanic work can be tough, especially without the right equipment. Some people are still getting it done. They don't have a lift. We're not doing that type of physical labor. But what we're doing here is very mental. And it's like mental torture, psychological warfare. Because even when you're supposed to get, or let's say, even when something, under a normal circumstance should get you mad and upset, you do not get upset, you do not get frustrated. And at least not to the point where you're willing to cause harm to yourself. You should never be in a place where you're looking to inflict damage to yourself. You are the most important person in your life. Without you, there's nothing else around you, right? If you're dead or whatever, that's it. So you have to make sure that you take care of yourself so that you can take care of others. If not, it's just not going to work. So that's the level of difficulty that we're dealing with here mentally. We can stand here for an hour and make some awesome money, but that doesn't mean that it isn't hard and that there isn't a lot of risk. It's not for everyone, right? If you lose it once, that could be enough on the wrong day to lose it all. So we must manage risk in every way possible that we know. Withdraw money out of your account if your account gets too big. Utilize the appropriate share size as you're going into trades. And the general process of how we identify a stock, understanding the liquidity aspect and why we want to trade a stock with good volume, right? We're typically looking for a lower float because of the supply and demand aspect. With limited supply, high demand, we can potentially get an imbalance. And of course, that imbalance can lead to, a successful day, or let's not say a successful day, but a successful stock in the aspect of it going up and offering opportunities, or maybe even going down and offering opportunities, because the imbalance could also be to the sell side, right? But how we identify a stock to trade, understanding yourself, understanding what you're comfortable with. If you're not as comfortable yet with the higher price stocks, 10, 15, $20, then reduce the size. If you're using 100 shares but you feel uncomfortable, Go down to 10 shares, 50 shares, whatever makes sense. Or you can, avoid trading them for now until you watch more videos, more archives, and feel more confident about trading them later. There's no rush, right? We're all on our own timing here. So understand that day trading is here, it's possible, but it's also risky. And so, this is where we're going to end it off, right? I've showed a couple videos of my quick rapid fire trades. We've talked a little bit about risk management. We've talked a little bit about some of the patterns that I look for. Guys, this is it. It's definitely difficult. It takes months, more commonly years, but I wouldn't have wanted it to be any other way. It's been an impressive week. It's been a really good day. 1,500 bucks in one day is a whole lot of money. It's a whole lot of money. I only traded for about 2 hours today before I started doing other things. So, it really speaks to the power and greatness, awesomeness that is here in the markets for those who can prevail and get to consistency. For those of you who are having a hard time, it's all about making adjustments until you get to where you need to be. And if you're someone who's been making adjustments for years, but you feel like it's just not working and it might not be for you, then you always have the decision to walk away, because at the end of the day, opportunity costs. Time that you're spending trading is time that you could have been spending doing another business or another job or something else. So at the end of the day, we still have to know when to cut our losses. If it's something that's just not working, you've tried everything, you've given it your best effort, at that point there's no regrets, especially if you approached it in the low risk way of using the simulators, using small size, then really financially you haven't lost anything. And even when it comes to time, you can't even say, hey, I really lost a year of my time, because ultimately, that's just the risk of life. You could have did another business, a whole different business, let's say real estate, or just something else, a brick and mortar business. Maybe you started up a grocery store, and the grocery store could have failed within 1 year or 3 years, whatever. Is that a waste of time? It's how you look at things, right? You learned a lot of lessons, you gain a lot of knowledge that you can now apply in another situation, right? They say that a winner is someone who just lost and tried again one more time. So if you fall down 7, you get back up 8, and you just keep pushing. Just do whatever's in the best interest for you and those that are closest to you, right? So manage risk, make the tough decisions as the CEOs, because ultimately in this field we are the CEOs, we are the business owners, we are the leaders. Only you ultimately can decide what the best plan is, the best course of action is, right? I'm here, Marcelo is here, Tim is here. We're here to help educate and guide you as best as we can. But ultimately, we understand that it's a field where it's very difficult and not everybody can make it, right? That's the reality, which is why we urge you guys to do whatever is necessary to ensure success. Because when you've given it your all and it didn't work, you can feel proud, you can feel good. But when you have like went halfway and it just didn't, it's like at the end, if you walk away, you really never knew if you could have did it if you gave 100%. And then that's the real you can get regrets. Like, you'd be like, man, if I had only known, I could have tried harder. I could have actually studied the material. I could have actually went through the classes. Guys, you have to go. There's people who are not going through the classes. You got to go through the classes. The information is there for a reason. If you have the time, if you're able to, in fact, if this is a dream of yours and you're serious about it, you got to make the time. Whatever is necessary to ensure success. Right now the course is sweet, man. It's a cheap course. It's very valuable. It might not be that way forever, right? So hit that thumbs up. Stay safe, stay green. It's been a full 1 hour video. Catch you guys on Sunday for our Q&A. All right, stay safe, stay green. Check out those links down below. It's been Relentless Trader. Hit that thumbs up. I'll catch you guys next time.